We're July 26th. I think we had another inflation data point come out today. I think it was a little more than was expected, but still the lowest in 3 years. All the signs point to the Fed holding on this one and signaling in some language that they might start lowering interest rates as early as September. Now, for the first time, Andrew, I don't know if you caught this as well. I saw an article actually saying it might be more than a quarter percent and it might be a half a percent, which was interesting. This is the first time I heard that, and I heard that today. So interesting place where we are in the market. I know you follow a lot of this stuff. You always post amazing charts on LinkedIn. So where do you see us today as we're recording? You might see these clips later on in a month or two, but where are we today? Like, how is your company strategically navigating the macro environment, and how's that affecting your offers that you guys are putting out on apartment buildings?
Yeah, in terms of the Fed, can't even predict what the Fed does. If you look at their dot plots and all this, they're always way off from what they end up actually doing. So I can say that the markets are heavily betting on a September cut of 25 basis points. I have not heard any chatter about 50 basis points. I would personally doubt that they would do that because that would send a message to the market that they might be panicking a little bit or admitting that maybe they overdid it, or any kind of sudden move the markets don't like. And I think that would represent a sudden move. So I would be really surprised to see a 50 basis point cut. 25 maybe in September. I think markets are currently factoring in a 100% chance of at least one cut before the end of the year. Maybe one in September, one in December. But candidly, for the multifamily market, it ain't going to matter. Most fixed rate loans are based on the 5 or 10 year treasury, which are hovering just over 4%. And then the floating rate loans that are based on SOFR, that index is very closely tied to the federal funds rate. And candidly, most of the properties that are in trouble with those loans, 25 or 50 basis points isn't going to be enough to make a difference. They're still going to be upside down, underwater, unable to afford the payment. That's where we stand with interest rates and the Federal Reserve and all of that.